Welcome back to Let's Talk Business, brought to you by RealtyNXT. This is Pradhanjali Rawal. On today's episode, our guest is Mr. Sharad Mittal, CEO, Motilal Oswal Real Estate. Hello,
Yeah,
Mr.
hi.
Mittal. How are you?
I'm good. How are you?
I'm doing great, thank you. So, let's start with your journey with Motilal Oswal Real Estate. First of all, how it has been over all these years. Please share with us.
So, journey has been very exciting. So, let me just give you a little background. I joined Motilal Oswal in April of 2013. So, close to 7 years. And if you really look at from the real estate industry perspective, the residential real estate property prices in India actually peaked in 2013-14. So since then, market has been seen fairly headwinded, especially after 2016. Has been seen fairly headwinded environment. But I'm happy to say that during this period, we have been able to scale up this practice. Have raised multiple funds. Have been one of the key players in the domestic real estate market. So from that perspective, there's been a lot of learnings, I would say, in last 7 years.
Okay, that's very good. So, how Motilal Real Estate, with expertise across all investment structures, has evolved over the years?
So I would say the firm started this practice in 2009-10. I joined in 2013, and we further strengthened the team then. So before I came in, along with the new team also joined, and the earlier team also carried on. There was one fund of 160 crores, which was there in place, and the strategy at that point of time was to do pure equity. I would say with the change in the environment and the new team and a lot of internal debate and building up a strategy, we moved towards doing more mezzanine structures, more debt-oriented structures, focused a lot around doing IT cities. We stayed away from Delhi and Bombay,
Yes.
and worked only with large developers doing mid-income housing. So I think what I would say from our platform perspective, from Motilal Oswal perspective, it's largely an investment house. And if I just add a couple of bits here, Motilal Oswal manages money across the asset classes. So whether it is public market, whether it is private equity or real estate private equity. So we take a lot of pride in saying that the firm is an investing platform, and all our funds, the firm is the largest investor in all our funds, whether it is real estate funds, private equity funds. So there is a lot of know-how that gets shared across the platforms. There are a lot of learnings. And of course, we have common pool of investors for all asset classes. So I would say the firm has really evolved over a period of time, starting with a very small 160 crore fund in 2009-10. And then from say 2013, moving more towards doing mid-income housing and mezzanine. And we continue to evolve because the markets are very dynamic.
Right. So right now, COVID-19 situation is going on, and we all know that COVID has kept the market in a very gloomy situation. So what do you think is a real estate need of the hour for the real estate segment?
The biggest challenge is the liquidity. Liquidity is the biggest challenge. NBFC, which was the primary source of capital for real estate between 2013 and 18, have also taken a bit of a pause right now. So I would say liquidity of any form and shape needs to be created. And that's the biggest challenge in residential market. Right. Sales remains muted, remains challenging. And post-COVID, there are other challenges which has got added around it. But I would like to believe that over a period of next 2 years, the primary challenge that we need to address is creating liquidity. Because I think the entire credit cycle has broken. If you really see, there are 4 kinds of capital provider for real estate. There are PSU banks, there are NBFCs, there are private banks, and there are funds. PSUs have been struggling with their own set of problems, except SBI. I can't think of anyone else who have been very active in this space. NBFCs, which used to be, like I said, which used to be primary source of capital, has kind of taken a pause post IL&FS crisis. Real estate funds, we are one of them, but from a size perspective, the real estate funds can provide limited amount of capital. Absolutely. That leaves private banks. And the private banks also, I would say, post Yes Bank fiasco. So Yes Bank and some of the other private banks have also decided to go slow. So I would say the ecosystem of providing credit to real estate sector has kind of shrunk. And I think as a sector, that's one big worry. And if the capital is not, if the credit is not coming as it should come, then you need to create liquidity from your sales. And I think developers would focus a lot to create liquidity through sales over a period of next couple of years.
Yes. So while talking about real estate funds, please tell us, how do you access the future of real estate funds?
I think I see real estate funds playing a significant role as we go forward. If you look at, there are largely, I would say, four asset classes in real estate. So there is residential, which account for 75% of the market. Then there is commercial. Then there is retail, warehousing, and other sectors, the smaller ones, was co-living, co-working, and so on and so forth. If you really see closely, in commercial real estate, private equity funds, the global private equity funds in specific, have played a key role in consolidating that industry. If you see today, there are large private equity funds which have come in and put in significant amount of long-term capital to bring in discipline, to bring in governance, to bring in scale into those businesses. We are seeing the same thing in retail as well and in the warehouse as well. Resi is going through a significant change the way the business is done, residential real estate, and probably it will take a couple of more years for really to sector to get cleaned up and get consolidated. I have no doubt in my mind that from a long-term perspective, private equity real estate will have a significant role to put in, get in an equity or a mezzanine in place, and the construction finance, which is the second leg of the capital requirement, will be done by the banks and NBFC. So I believe in residential real estate, private equity funds have played actually a limited role. Barring 4-5 active funds, I don't see anyone active. But as the things cleans up, or there is more clarity on how the sector will play out, I see a lot of capital coming into this sector.
Right, right. So, with the funds of more than 1,000 crores, you have been investing a lot in real estate sector. Please tell us, what are the factors you keep in mind before going ahead with such huge investment?
Yeah, just one correction there. We manage 4 funds and our cumulative AUM is close to 3,500 crores. Our new fund we just closed raising is a 1,200 crore fund. See, before you do investing, first of all, you need to get your strategy. You need to have a crystal clear strategy on what you want to do. Okay. We devised our strategy 7 years back when we moved from doing, say, in a smaller fund equity to doing more mezzanine. Our strategy all along has been to work with large, meaningful developers, largely in IT cities, doing mid-income housing under mezzanine structure with an active management. That's broadly is what we have been doing. So one needs to have a very crystal clear strategy. One should not get swayed by, look, now the flavor is commercial, or there is a very nice plotting. So we have been very focused on doing mid-income housing. No, not low cost, not luxury, but the mid-income. Right. One of the key most criteria in this business is to get the right partner. Partner choice, otherwise also in India, is extremely important, but in real estate it becomes paramount. And this is one business where you can continue to grow with the same partner. You can do multiple transactions. Unlike a typical private equity where you do one-time investing, in real estate, if you get the right kind of partners, so choice of partner is the first and the foremost important thing. The second important thing is the project maths. Whether the kind of underwriting that you're doing, is it conservative enough to take the external shocks that can come? So I think conservative underwriting is the second important thing. It has come really handy to us. We are very conservative underwriter. We are very risk averse people. And I think that is something which is important with the kind of cycle that we have seen. Third, in this is the legal and the technical part of it. But I think the real business around real estate investing starts once you have put in money. Like I keep saying that giving money is the easiest thing. Getting back is the skill in this. Once you give money to a developer, getting money with a desired return is the hard work. So I think in this business for us, what is also very important is the entire asset management process. What do I mean by asset management is that once the money is gone in, you need to be deeply involved into the project. You need to know where the money is going, what kind of design, what sizes of apartment, what sales strategy is going to be there, what payment plans are going to be there, and you need to be involved with the cash flow movement of the project. So I think it's a combination of all of it which makes a good investment. Getting a strategy, right partner, conservative underwriting, and post the money has been deployed, very active asset management.
Okay, okay, that's great. So, because of COVID-19 situation, now earlier also technology had gained a lot of importance over the years, but because of COVID-19, it's like the technology we were supposed to use maybe 10 years later, we are using right now. We have become much more advanced. So, what do you think is the future going to be like when it comes to creating better engagement with customers with the help of technology?
I think one of the things that COVID-19, one of the impact for COVID-19 is that it will accelerate the entire pace of change.
Does.
Something which would have happened over a period of, say, a decade. And that's we are seeing across the board. And because everybody has got at home and technology, we are chatting on Zoom and it's working very well. And actually, most of the people are realizing that the technology has been a big enabler. So I think it will accelerate the changes which has to be happening within the real estate. I would not hesitate in saying that the real estate developers or the real estate industry per se, including the funds as well, technology has not been greatly adopted. It remains a brick and mortar business, and the adoption of technology, I would say, has not been that much before COVID. But I think technology will play a great role. I think and eventually from B2C perspective and from a sales perspective, which has been a critical challenge for the industry over a period of last 3-4 years, your consumer is stuck to the screen. The consumer has adopted the technology. Right. Today, whether it is his entertainment or whether it is shopping, or a lot of other things are happening through the technology or technology interface, whether it is e-commerce, OTTs, and so on and so forth. The entire entertainment, sports. You look at youngsters. I think they play mostly on the outdoor sport has significantly reduced.
Yes.
So I think real estate industry would need to see. I don't know whether developers can do it or not, but there will be specialist player, and we already have seen like Square Yards and Anarok and so on and so forth. I think the sales end of it has to be technology enabled. There is no doubt in my mind. One is that. Second is the entire supply chain within the construction also technology can play a significant role in that. And then the monitoring part of it. What I feel happy is about, because technology will disrupt a lot of businesses. And we are seeing that technology has disrupted so many conventional businesses. But real estate, it will remain an enabler, not a disruptor, because eventually there is a brick and mortar which is required to build a house. So technology probably would be a great enabler in a real estate sector.
That sounds really great. So going forward, do you see that the next big trend that will emerge where, developers would focus more on planning and licensing and construction, and a special team would be hired just for the marketing? Can we see any such engagement on behalf of your company in future?
So I think real estate developers are already doing it. I think real estate developer unfortunately gets bashed a lot, and they are probably have this conventional notion that they're still operating in old world. But let me tell you, we have 30 developer partner, and they have actually in last 4-5 years really changed a lot. The markets have been very dynamic. So funds will play a role. All investors, all stakeholders, we need to get involved to see how they can create more value for the consumer. Let me tell you that there is a paradigm shift that everyone in the real estate needs to bring in. Everybody is here working to bring more value to the consumer.
Right.
Gone are the days where developers could delay the project. Gone are the days where the suboptimal product can be given. Everyone involved in the value chain has to work towards giving an efficient value delivery to the consumer. And there will be more business models that will evolve. And funds probably could play a large role from a strategic ideas perspective, because whether it is the strategy around sales, whether it's strategy around their balance sheet management, their debts, cash flow, funds can play a very significant role in that.
Okay. So, what do you think going forward, like if we talk about next, say, 12 months or 24 months, what would be the most significant risk and challenges that you and your business would face over the period of this time? So, what do you think would be the challenges like?
So I think one big challenge that all of us are witnessing right now is how this whole COVID-19 situation plays out.
Yes.
One thing is for sure, it is not going away in 3 months. How, as a country, as a policymaker, we deal with the entire challenge. The sites needs to get active. The consumer needs to get that confidence coming back to the site. How will be the various sectors and the employees working there and their remuneration and some other things will play out. So I think the environment remains very dynamic. I think one big risk is the uncertainty around how this unfolding of COVID will take place.
Okay.
But if I have to really look at from 2-year to 5-year perspective, near term can get little opinionated and probably can get a little colored because of the way the environment is right now. But if I look at largely from say 2 to 5 years and beyond perspective, I think residential should do well. And my reasons for believing that is as follow. One, residential property prices has been stagnated for 7 years. They probably will remain like that for a couple of more years. A 8 to 10 years period of stagnation will make it extremely affordable. So what you could have bought for, say, example, of 5,000 rupees a square feet in Bangalore, you can buy the same thing for 5,000 today and probably for next 2 more years. But the income level during this period has gone up. Wage inflation in these markets have been between 7 to 8%. So that makes it affordable. The second driver is the mortgage rate. We are at 15-year low mortgage rate. The home loan rates, they have fallen sub 7%. And I believe it will remain here for some time. That's also one big driver. Third thing, which is non-financial, and I keep hearing from people, this lockdown actually, and that's probably could be more emotional reason. This lockdown has got people the real need of the house. They need their own house. They need a space of their own, and probably if work from home is going to be something which is going to play out, maybe not in large extent, but say even 10-15%, people will feel a need of having a house where they can create a small office for themselves. From all those perspectives, I believe maybe next 12 to 24 months, we'll keep facing challenges around debt unwinding, some of these low sales, and some of the other challenges that we keep hearing. But 2 to 5 years and beyond, I believe there is a lot of opportunities in mid-income housing. Houses built for end users, not luxury houses built for speculation. That's not going to work. That probably has a next 3 to 5 years of trouble time. But houses built for middle class with an end user's mind I think will do really well over a longish period of time.
Absolutely. And during COVID, people have realized that, instead of renting, it's a very good thing to have your own place, to have your own home. So all of a sudden, people have realized that, the requirement to have a safe place where we don't know how long COVID will go on. And usually people suffer problems like we have people who have rented the place. So they usually face the problems like, okay, in between my agreement is over, now I might have to move out. So maybe these are very small problems, and people with families, with kids, they would like to problems.
Yes. In fact, one of the economic, if you look at purely from financial perspective also, the rental yields in cities, larger metros have inched toward 2.5% and 3%. And the mortgage rate has come down to 6.5-7%. So the gap between renting a house and buying, and also this probably is one of the best times from a perspective that prices have been at the bottom and probably will remain like that for 12-24 months. But this is the best time for end users to really go out and strike a deal. They would get good deals from the developer as well. So I believe over a period of next 2 years, as the negative news flow reduces or goes down, or we form a new bottom and whatever challenges of the sector, I think we should probably post 2 years. But the luxury market, the high-end market, some of the micro markets in Delhi and Bombay, I think the struggle will be continued beyond 2 years as well.
Yes. That's absolutely right. So that was my last question for you. Before we sign off, would you like to share something with us?
No, I think it's great talking to you, and I'm looking forward to the impact of this COVID in more positive way. I'm seeing how the how the offices, the organizations can become more efficient. Technology adoption should make all of us more efficient, um, and I hope we get back to normal world very soon. And look forward to more. I would say more efficient way of doing businesses.
Definitely, as you rightly said, that residential will be the future, and I really wish, like how commercial sector is bleeding right now, something we're able to solve those problems also. So that'll be great.
Yeah,
And so thank you very much for joining us and
thank you,
sharing insightful experience to the audience. We will come back.
thank
Thank you very much. Thank you.
thank you. Pleasure talking to you. Thank you so much.
To the audience, we'll come back with many more exciting journeys of brands on Let's Talk Business. For more information, follow Reality NXT. This is Pradhanjali Raval signing off.